Today, we're pulling back the curtain on the first-time homebuying journey and turning confusion into a clear, confident plan. My guest, Stacie Rihl, is a first-time homebuyer expert who teaches practical, step-by-step classes that take you from saving and pre-approval all the way to offer, closing, and building wealth without the fluff. She's helped buyers nationwide pair with trusted agents, prepare the right way, and stop renting their future. If you've wondered, how much do I really need down? Is now a terrible time to buy? Or where do I even start? This is your episode. So grab a pen. By the end, I promise you're going to know your next 3 moves. Welcome to She Talks Money, Stacie.
Thank you so much for having me. I'm excited to chat.
I am so excited to chat, and I'm really excited to chat with another expert. I've been in the mortgage business almost 25 years now, but you are like very solely focused on first-time home buyers, which are always some of my favorite because it's like the teacher I wanted to be when I was little, the hand holding. I just love it. So I'm really excited to share with our audience all of your expertise as well. So why don't we start with just like a little bit of your background and what was there a moment that made you realize that first-time home buyers needed a totally different kind of education than others?
Yeah, so I started my career as a real estate agent in Philadelphia, and I very quickly started gravitating towards first-time home buyers. I think I was like 22, 23, so that was kind of like my age range. But a lot of my peers at the time weren't quite buying houses, right? Like we were just kind of coming out of college. So we were a couple years out from really making that move. And a lot of people were coming to me. They were like, "Hey, like I want to buy a house one day, like in a couple years. What do I need to be doing now?" And I was just getting the same questions like, "How do I prepare?" And I realized that there's a lot of information and resources out there for like, okay, when you're ready to look at houses, there's Zillow, there's all of that. There's a ton of information for when you're actually ready to buy a house like today, but there's not a lot of resources for preparing. And then suddenly a light bulb went off, and I was like, I'm going to teach classes for people who want to buy a house but maybe aren't quite ready. And I had a huge amount of interest that really surprised me.
Mm-hmm.
And it's kind of just snowballed from there. I mean, I think that was back in maybe 2017, 2018, and I was teaching in-person classes to first-time
Mm-hmm.
homebuyers in Philadelphia. I was doing that once a month. And then in 2020, COVID hit, and I was like, okay, we'll do a class on Zoom, and then we'll just get right back to it, in 2 weeks when all of this is over. And then I started having people reach out to me, be like, "Hey, I'm not in Philadelphia. Could I come to your classes?" And I was like, "Yeah, I guess, you can. Sure. Like,
Mm-hmm.
why not?" And the classes have kind of grown from there. And then at the end of 2020, I decided to make a pivot and go into the mortgage business just because, as you know, yeah, a lot of the questions that people were asking me were financial.
Mm-hmm.
And so I was like, okay, I feel like I could help a little bit more if I had like a wider knowledge.
Mm-hmm.
So I pivoted to working in mortgages instead of working in real estate. And I did that for about a year and a half, and kind of got all of that experience of doing the same thing with first time homebuyers, but
Mm-hmm.
on the financial side and answering. I just got like every single financial question under the sun.
Sure.
And then after about a year and a half in mortgages, I decided that I wanted to help people outside of just my local area.
Mm-hmm.
Um, and so I opened my business nationally as a matchmaker. And now I do the same thing. I teach first time homebuyers, but I help people find their real estate agent all across the US. So that usually for people, when you're about a year to 6 months out, maybe sooner, your next step is going to be to connect with a real estate agent.
Mm-hmm.
So I'm able to help people like actually take that next step as a first time homebuyer. So yeah,
I love
that's
that. You literally just answered my next question. I was going to say, when a brand new buyer lands in your lap, in your world, what's the very first thing you help them do kind of in week one? And an agent is probably one of the first steps, along with a lender, obviously.
Yeah, I tell people the first step is to come to my home buying class so that they can learn an overview of the home buying process. And yeah, even if people aren't sure if they're ready to buy, even if they're a
Mhm.
couple years out. I'm like, hey, just come to like see how it all works. And a
Mhm.
lot of people will come to my classes and they'll be like, wow, I thought I was like 5 years out, but like realized that I could actually buy a house today. So yeah, I tell people first learn the process and
Mhm.
then connect with an experienced first-time homebuyer agent in your area and then get connected with a lender.
Perfect. So your classes they promise clarity from savings to keys. What do you think the biggest mindset shift buyers make when they kind of finally see the full path?
Yeah, I think number one, like a lot of people will say, hey, I can actually do this.
Mhm.
Or on the other side, some people will say, hey, I realize, I'm not quite ready and I still have some savings to do. I still
Mhm.
want to get myself in a good financial position. So it's one of those like, do I need to wait? Am I still kind of saving and taking that action? Or am I actually in a good spot?
Mhm.
I would say, yeah. And then like getting connected with an agent is really not as scary as a lot of people realize, and connecting
Mhm.
with a lender also. I think
Right.
it kind of scares people to dive into the financial picture to have some, I mean, like having
Yep.
someone open the book on your finances is
Mhm.
scary for a lot of people, but they realize like, oh, it's actually like pretty easy and it's very doable.
Yeah, people get in my world, I feel like one of the biggest hesitations is, oh my gosh, you're going to pull my credit. And I'm like, I mean, we have the ability to do a soft pull, but also after I do a full credit analysis with people, they're like, oh my gosh, I learned more in like this 10 or 15 minute conversation about my credit now and what I can do in the future than I have online or anywhere else. And it's such a beneficial conversation for people. And they after realize, like, I don't know what I was so afraid of, right?
Yeah.
So,
Yeah, I agree. I think that there's this illusion that once you talk to an agent and you talk to a lender that you're like committing to buying
yeah.
a house, but it's actually just gathering information and like
Hmm.
moving forward and then you decide the timeline based upon that. So,
Yeah, exactly. So let's do the down payment reality check. I love this one. What do buyers actually need on hand with, I always call it my three buckets, right? Your down payment, closing costs, and whether you call prepaids, escrow, reserves. And then what are the most common myths around that?
yeah, so I teach a 3% down payment for first-time homebuyers. Of course,
Mhm.
sometimes it can be less, but in general, about 3%.
Mhm.
Right now, it just came out that the average first-time homebuyer is putting down around 10%. So 3% is the starting place, and then you want to work from what monthly payment you're comfortable with. So if you look at an online mortgage calculator and you're like, whoa, 3% down, my monthly payment is way too high, then you want to save a little bit more. But a lot of people don't realize like, oh wow, like I don't need 10 or 20% down. It is
Mhm.
possible with three. And then closing costs, it does depend on where you're at. So
Mhm.
I lived in Philadelphia, closing costs are around 6% there.
Mhm.
But also here, not right now, I live in Massachusetts, closing costs are only about like 1.5%. So I generally say to have about 3% saved for your closing costs.
Yep.
So around 6% minimum for your closing costs plus your down payment. And then one of the when I bought a house, one thing that I didn't realize is how much money I was gonna spend in the first couple of weeks. Like I remember going to Home Depot and like spending $1,000. And I just like no one really talks about that. So I've
Mhm.
been teaching to to save about $5,000 extra just to get
Mhm.
you through your first couple months as a new homeowner. So about 6% for your closing costs and your down payment plus about, a $5,000 buffer just to be safe.
Yeah, there's stuff houses require stuff, right? That you don't normally have in an apartment living
Yeah.
situation.
Yeah.
So if someone wants to buy in 6 to 12 months, what's your simple, like, no shame savings plan? Whether it's buckets, automations, target, we just talked about target numbers, right? Maybe 6% between down payment, closing costs, and then an additional 5,000 for, that first grouping of stuff that we need. Excuse me, first grouping of stuff that we need. But what do you teach any simple ways for them to try to save that money?
Yeah, so I teach exactly what my husband and I did. I teach to have a checking account where you have
Mm.
1 to 2 months of expenses, and then on payday, set up automatic transfers and calculate, okay, what's, 1.5 to 2 months of my expenses look like. And
Mm-hmm.
then anything over that is going to be automatically transferred the day you get paid to a high yield savings account. And I think just making that automatic,
Mm-hmm.
um, just you don't forget. And
Yeah.
it just simplifies it and it just happens. So when we were saving for our first house, when we got paid, everything that we did not need for our living expenses was immediately moved to savings. We pretended like it didn't exist, and then we were able to like save. Thankfully, I know everyone's kind of different depending on your scenario, but I think
Mm-hmm.
having that checking account for expenses, and then also having a high yield savings account and having it dedicated for the house, like having a
Yeah.
dedicated account, really makes a big difference, because then you know exactly what money is going to where, and it also
Mm-hmm.
keeps you really motivated, because if you see like, oh, I managed to save $10,000, that's really motivating, and then you
Mm-hmm.
keep going forward.
I just did an episode about like name your money accounts, right? I
Yeah.
love when I get bank statements from people and the accounts are like are named, like there's a kid account or there's a house account or there's a trip account. Like I love when people do that because it's super motivating for people and kind of keeps you on track.
Yeah.
Um, so let's chat about credit. Credit is a really big part of this. So what moves change a credit score the fastest and maybe what doesn't?
Yeah, so I'm sure you see this a lot as a lender, but one thing that I realized when I was working in the mortgage industry is that a lot of people will say like, "Oh, I'm buying a house, so I want to stop using my credit card." And that's actually really bad. Like it can
Mm-hmm.
actually make your credit drop. So continuing to use credit but pay it off. And I recommend looking at your credit card, like usually in the portal, there's an FAQ section or it's listed somewhere, or you can reach out to support, and finding out when your statement closes, which is
Mm-hmm.
usually about 3 weeks before your payment is actually due. And if you start paying your credit card before the statement closes, it never actually shows up on your credit report, which
Mm-hmm.
is going to lower your credit utilization, which will boost your credit score. And you can also reach out to your credit card companies and ask them if they will give you a credit limit increase, which will also lower your credit utilization. I don't recommend doing it if they require a credit pull.
Mm-hmm.
But a lot of credit card companies won't require credit pull, and they'll give you a limit increase. And then you just, the amount that you're putting on your credit card compared to what your limit is that ratio is decreased. So that'll give your credit score a quick boost. I think that a lot of people will say like, oh, hey, like I have a 750 credit score, like it's fine, I don't need to worry about it. But
Mm-hmm.
every little thing that you can do to really get your
Mm-hmm.
credit score as high as possible is going to make a big difference.
Absolutely. And I think that's one of the biggest misconceptions. I know for myself, we primarily use two credit cards, right? I have a personal credit card and a business credit card, and I charge everything that we do on that credit card. I pay it off in full every month. And so that's a
Yeah.
misconception. People think if I pay my credit card in full every month, then my credit bureau is going to be showing a zero balance. And that's not the case. To your point, it's going to pick up the high balance in the pay cycle. So you can kind of trick the system a little bit to find out when that closes, pay it down or off, then do the credit pull once the bureaus are going to update. And then you can go back to using your credit card if you need to, right? So there's a little bit of a loophole we got to work through sometimes to just really maximize that score because it can make a difference in the interest rate.
Yeah.
Um, and then how about the DTI decoder in everyday language? How do lenders look at debt to income and what are two fast ways to improve that in 30 to 60 days?
Yeah, great question. So lenders are looking at the amount of debt that you have compared to your gross income. You can agree or disagree. Let me know what you think. But they want to see under like 45% for
Yeah.
your total debt. So if you take your gross monthly income and then you multiply that by 0.45, that's the most of like total debt that you can
Hmm.
have, right around there. Um, so something that you can do is you could potentially lower your monthly debt payments. So like if you have for example, like a credit card bill, and the minimum payment is $100 a month, and then you could start paying that down so your minimum payment is less. So it could be like
Hmm.
$25 a month. That would increase the amount that you would be approved for.
Yep, exactly. Great answer. All right, let's jump into a little bit of like pre-approval and team building section here. So pre-qualification versus pre-approval versus pre-underwriting or underwriting approval. What's the difference and when does each really matter when it comes to a competitive offer?
Yeah, so I'm interested to see if you agree in what you say, but
Okay.
I think every market's a little different. Like everyone has
Hmm.
like different nuances, and also every lender is a little different in the term that they use. So when I was a lender, a pre-qualification meant that your loan application had been submitted to automated underwriting, and it had been like approved by a computer. That was a pre-qualification.
Okay.
And a pre-approval was when the underwriter for the bank had actually gone in and approved your loan. With, of course, in order to be fully approved, you need to have a specific house. But they were
Hmm.
like, hey, we've literally approved you. All you need is a house, and then your loan will go through.
Hmm.
And so the pre qualification could take 12 to 24 hours. The pre-approval could take up to 2 weeks because it actually had to go through underwriting.
Yeah.
So is that how you do it also?
So our terminology is a little bit different, and we kind of use all three buckets. So pre-qualification is I spoke to a client on the phone or they submitted an online application. We've done maybe even just a soft pull or a hard pull on their credit report. They verbally or on the application have told me that what their income is, right? And then what their assets are. And so I can roughly give a pre-qualification based off of that information to say, hey, based off what I'm seeing on credit, this is about what the program you would be qualified for would be. Here's your price points that you would qualify up to from a max standpoint. It's really a rough guideline, and I'm very careful to make sure that they understand we don't house shop on a pre-qualification. A pre-qualification in my world is this is just an education to give you a rough idea of like what you're going to be at. A pre-approval is you now submit your income documents and we do a full hard credit pull so that I can run it through automated underwriting to get an approval. I can look at the income and the asset statements and say that I have verified all of that. So that I would say is a pre-approval. An underwriting approval, and by the way, in from a lender perspective, I submit all for a pre-underwrite. So I'll let them start house shopping at a pre-approval stage as long as it's not something complicated. I just had one with a really crazy 2-year work history, and I'm like, we can't house shop yet. Like I need an approval from an underwriter to make sure we're good on this. But an underwriting approval is then, to your point, what you kind of set up a pre-approval is an underwriter actually looks at it and verifies the income. So I know that's the income that they're going to approve, and then we're good to go. And nowadays, depending on the lender that you work with, we use a lot of AI underwriting. So we can run it through Candor, which means that if we have income assets or verifications of employment and bank statements, if Candor says this is the income that I'm giving this file, an underwriter will follow suit and it will use that income. So we can kind of sidestep the actual underwriter looking at it now and run it through that system ourselves and speed up the process just a little bit. So
Ah, so
those are kind of,
interesting.
yeah, kind of where we're at with our
Yeah.
phases, I guess. So
It-
I think the
yeah.
most important thing is like the income piece, right? Make sure that we know how much income that you can use to qualify and we verified your assets. Because the last thing I always tell people, the last thing I want you to do is go and fall in love with a house and get so excited and me have to come back and say you don't qualify for that house. We don't want that to happen. So,
Yeah. Yeah, I agree. I think that just goes to show that like depending on what market you're in,
mhm,
the level of your pre-approval and like what that means, it may be different. So like really
mhm,
having someone local is going to be so helpful.
yes.
And like I tell people who are not to name names, but they're like, oh, I just like went online and I got my
Mm.
pre-approval and it took me like 5 minutes. And I'm like, like you could get pre-approved, and if you don't have a good lender it could fall apart, and that's or like you could have issues with your mortgage which could cause a delay. Like you need to have a good lender who's really looking at your finances,
Mhm.
because it could get really messy really fast if you have bad lender. And if someone's ever been through that, I feel like sometimes they don't believe me.
Hmm.
But yeah, like you have to really verify everything. And it's really important that you have a lender who's like gonna do that and not just like
Yeah.
submit it online and not really care if, you pay for a home inspection and then you can't buy the house anyway.
It's sometimes I like the analogy, and it seems so dramatic, but the analogy of like, would you use a discount doctor, right? Like you're gonna
Hmm.
go have surgery. Would you use a doctor that's just gonna perform the surgery, or do you want a doctor that's actually going to do the pre-health check and talk about any diseases or issues that you might have now and in the future? I think that's the difference between some online lenders and advisors like myself
Hmm.
who are going to really ask a lot of those questions of what's important now, but what are your plans for the future too? Because we want to set you up for success, right? We're helping you buy your biggest asset. We're also putting you in your largest, probably debt. And so we want to make sure that you're managing
Yeah.
that right.
Yeah.
So choose your squad, right? As we're just talking about, how do buyers find a trusted lender and agent? And what three questions should they ask to vet the right fit?
Yeah. So I have a service where I match first time home buyers with agents. So anyone listening to this can reach out to me. It's totally free. But the things that I would look for is a real estate agent who works with first time home buyers a lot. Like a majority of their business is first time home buyers so that they have that extra patience and they can really
Mhm.
explain everything so that they have the time to show you houses and like go over everything. And so someone who's super local to your area and really knows that market, because when it comes to submitting offers, your agent is responsible for negotiating for you. So, whether you
Mhm.
can negotiate down the price or get an interest rate buy down, you want someone who can negotiate for you. And on the other side, if there are 10 other offers, you want someone who's going to be able to win that offer for you. So having someone who really works with first time home buyers and really knows the market and of course is experienced, so that they can really help you get a leg up and avoid mistakes and go through the process smoothly. I teach people to ask their agent for local lender recommendations. That's a really
Mhm.
really good starting place,
Mhm.
because I always tell everyone, when we were having work done on our house, we bought a little bit of a fixer upper. We had our overhead lighting redone. So we had an
Oh yeah.
electrician and we asked our electrician for contractor recommendations to redo our floors. And that electrician had good recommendations because they're
Mhm.
always like working on the same projects side by side.
Yeah.
So they'll know like who the good people in the industry are. So agents will usually know who the good lenders in the area are, um, to find someone. And then, as you said, a lender who is going to work with you personally, and answer your calls, answer your questions. Like you don't want to be just another number in the
Mhm.
system. Like you want to have your lender's phone number. You want to be able to access them when you have questions, and someone who, you trust is has your back and is able to explain everything to you.
Yeah, I think that's great. And going back to the agent, one of my favorite first time homebuyer agents, one thing that they do, and I don't know if you've seen this, is they do a first time homebuyer tour. So they'll kind of gather what's important to that buyer, and their first go around isn't like necessarily picking and choosing specific properties the buyer wants to see. They just do a tour of different homes that are available in the areas that they're seeking. So she can point out maybe it's the difference between like a townhouse and a single family house because they're not super sure yet, or different areas and kind of what to look for. It's like you're looking at the house, but you're also looking at the area. And a lot of first time homebuyers forget, like you have to think about like the commute. What do you do in your day-to-day schedule that is going to change when you change locations? And did you think about how long it's going to take you to get to the gym, or where's the nearest grocery store, or your commute to work? You know what I mean? So I think that's super great, and people love that little first time home
Yeah, I
tour
love
that she
that.
does. So walk us through your like classroom to action plan flow. So after learning, what are like the first two documents or decisions buyers typically tackle?
Yeah. So usually after coming to the class, their next step is to connect with an agent in their area if they're looking in the next 6 to 12 months. If
Mm,
they are further out, then I have a checklist that they can go through, things like a lot of what we discussed, looking
hmm.
at their credit, getting a high yield savings account, saving as much as possible. Those are really the two things. So connecting with an agent and then getting a
Perfect.
lender. Um, Another thing that I also recommend is working on a list. So, creating a list of the top three most important things that you're
Mm,
looking for in a home, like three must haves, and then three nice to haves, and then your top three areas. I think
mhm,
having this list ahead of time will save you time from looking at the wrong houses that don't match
mhm,
it, and B, it's going to make the process a lot easier once you do find a home because it
mhm.
is such a big purchase that a lot of people will second guess themselves and be like, "Oh my gosh, like is this the house? Should we keep looking?" And but if you have that list that you can refer to, you can be like, "No, like it has our three must-haves. It has everything that we've been looking for. We can go for it." And I started recommending this a couple years ago because that's what my husband and I did, and it made the process really easy. And then I
Mhm.
just had one of my past students on. I was talking to him, and he was like, "Oh yeah, like we did this thing, we made this list." And I was like, "That's the list that I recommend." And he said like how much easier it made it, and that
Mm.
same thing. Like once they got to the offer process, they were able to be like, "Oh yeah, like this has all the things that we want. Like we should go for it." So.
That's amazing. And don't underestimate Google Maps, right? Like people forget that. And we're like, it depends on your location. And if you're in an area where you really know it well, then you're good. But we're in a metro area. So sometimes Google Maps from an aerial view to say, okay, I'm going to pin this property. How far away really is the freeway? Or, you know what I mean? Those kinds of things can make a really big difference. We bought our first home and this I am in the my husband was in the business at the time, so I don't know how this like went. It was new construction and we chose our lot and we didn't realize until we moved in there were railroad tracks just on the other side of the hill from us. So first day we're sitting in our living room and all of a sudden the house is like almost shaking a little bit. We're like, what is this? And we're like, oh, we probably, if we would have walked around a little bit, we would have realized there were railroad tracks right there. So little simple things like that. You don't,
Yeah, yeah. I think it's a good idea to like do a commute, like
yeah.
drive the area, pretend like you're going there after work. And yeah, like go there at night and see what the
Mm-hmm.
neighborhood is like. I think, yeah, going to spending as much time in your potential area as possible,
Mm-hmm.
like the better, the more informed you're going to be.
Absolutely. Okay, some of my favorite things, market miss rates and strategies. So the famous question, should I wait for rates to drop? What's your honest read on timing and how do you coach buyers on like the marry the house, date the rape type of responsibility?
Yeah, good question. So, if someone is kind of debating, like, should I buy now? Should I wait for rates to drop? Should I wait for prices to drop? It is basically like going to Vegas and playing poker because we really don't know. Like, I'll talk
Mhm.
about, like, okay, these are the market predictions. This is what's likely to happen. I've been talking about that for 3 years, like what the economists have been saying.
Mhm.
They're always wrong. Like
Yeah.
economists, even like the top economists uh, have no clue what is
Mhm.
going to happen with the market, what is going to happen with interest rates. So you really can't make, for a lot of people, this is like a $400,000 purchase, a $600,000 purchase. This is a
Mhm.
really expensive purchase, and you can't make that purchase based upon predictions because
Mhm.
we don't know what's going to happen. So the question, instead of is it a good time to buy, the question needs to be, is it the right time for me to buy? Am
Yeah.
I financially ready? Do I have the money saved? Is my credit in a good place? um and also, like, you need to think about how long you're going to stay in the home. I generally recommend staying in the home 5 to 10 years.
Mhm.
That's not a blanket rule. I bought a house and I only lived there for 2 years and then turned it into an investment property. So, but I think the longer you stay in the home, the more protected you're going to be from any market changes. So, a more base your decision on when you're going to buy upon your financial situation and whether you're ready or not, and
Mhm.
whether it's a good decision for you, than on what's happening with the market, because we literally can't control that and we can't predict it. And it's really risky to make decisions based upon that.
Mhm.
And marry the house, date the rate. I think that it kind of came about to inform buyers that, hey, like you're not always stuck with your interest rate. Like
Yeah.
if interest rates
Exactly.
drop, you can refinance. And so I think it helps to remove some of that FOMO. Like, what if I buy a house today and then next month interest rates drop? Then like I'm like out of luck. Like that stinks. And
Mm-hmm.
so it's like, no, like you could buy a house and then if interest rates drop, you could potentially refinance. So there's that side of it.
Mm-hmm.
But I think it does come with risks because, like we said, we don't know what's going to happen with the market. You know, we thought that interest rates would be 5.5% right
Yeah.
now. Like they're not, like interest rates haven't really dropped. So it's risky to think like, hey, I'm just going to refinance when interest rates drop because rates may never drop. Like rates could be
Mm-hmm.
7% for the next 5 years. Rates could actually go up and you may never be able to refinance. So
Yeah.
you have to get a house knowing that you're going to have that payment and make sure that you're comfortable making that payment for the next
Mm-hmm.
5 to 10 years. And then you could take advantage of interest rates dropping if they do, but they may
Yeah.
never drop.
Perfect. I couldn't have said it better myself. That's perfect. Perfect answer. Okay, so affordability plays. Speaking of that, what strategies are you seeing actually work? Like seller credits, temporary buy downs, price negotiations, new build incentives.
Yeah, so I was just looking at the numbers for a video that I was making. The latest data that we have is from early 2025, so the first quarter of 2025, and at that time, an average of 44% of sellers were giving seller credits, and
Wow.
that's on like all houses. And in some areas like Seattle, 71% of sellers were
Wow.
giving seller credits. So it does depend on the market that you're in, but almost half of sellers are giving credits. And also, I believe that this is for 2024. 2024 interest rates were around 7%, but over half of buyers had an interest rate below 5%. So
Mm,
that goes to say, you know, a lot of people are leveraging interest rate buy downs,
mm-hmm.
whether that's temporary or permanent. I think it's fair to say like most people are buying down their interest rate.
Mm-hmm.
What I'm seeing right now is a lot of temporary buy downs.
Mm-hmm.
So the 2-1 buy down when your interest rate is 2% lower for the first year and 1% lower for the second year, and then goes
Mm-hmm.
back to the normal rate. Those are being leveraged. You do have to be careful with them because you, again, like we said, you need to be ready for
Yes.
the payment to be higher.
Mm-hmm.
So yeah, there's definitely a lot of people getting seller credits. The numbers are a lot higher for new builds. I think it's something like 60 to 70% of people
Mm-hmm.
are getting interest rate buy downs with new builds. So
Mm-hmm.
in some areas, buying a new house is more affordable than buying an
Mm-hmm.
older home because you're able to leverage the interest rate buy downs with builders. But yeah, I think that's really the biggest thing that you can leverage right now. And depending on the market that you're in, you know, I talk to people outside of New York City where the market is crazy. And then I talk to
Mm-hmm.
people in Florida where the market's a little slower. But depending on where you're at, um, a lot of people have a ton of negotiating power right now. So you can negotiate for those interest rate buy downs and a reduction in price,
Mm-hmm.
which is very different than, you know, if you were buying a few years ago.
And that's where it's really important too, I find, to have to go, do something like your course, get the base information, and then speak to a local lender and real estate agent who knows the market well, because it does differ so much from area to area. And to your point, yes, you want to wait until you're ready to buy, but if you're going to play the market at all, like for me, we're in Minnesota, right? So it's starting to get colder and our market definitely slows down in the winter months versus spring. As soon as it gets warm, it will take off. And obviously, depending on inventory, there's going to be a lot more buyers on the market. So if you're ready and able to maybe buy in the winter months, there may be an opportunity for a bigger seller concession or opportunity there than versus spring summer market when there's a whole lot more buyers on for competing for the same properties, and you might not have that opportunity. So that's just one thing to
Yes.
kind of think about too.
Yeah.
um, so speaking of inventory, how do you recalibrate wants versus needs without people feeling like they settled?
Yeah, I think it is sitting down and having that conversation, making that list of like, what are my must haves? You can do that at the very beginning. And then I think I love that idea of like doing a tour and looking at the
Mm-hmm.
market, but you could also just, you know, pop up on Zillow. And if the homes in your area are like we're not going to be able to get that for our price point, you can have another conversation and maybe readjust those expectations.
Mm-hmm.
I think you do need to be very realistic with what you're going to be able to afford. And the more realistic you can be about what you actually need, like what do you need versus what would make it a little better, is going to make the process a lot easier. And also talking to an agent who really knows the market is
Mm-hmm.
going to make that process a lot easier. Yeah. And just remembering, a lot of people don't stay in their home for 30
Mm-hmm.
years. So a lot of people, they'll get their first home, they'll live there for, 10 years and then move on and get their actual dream home. Um, so yeah, I think just a combination of being realistic with the market, knowing that you're probably not there forever,
Mm-hmm.
will help a lot.
Stepping stones, right? I remind
Yeah.
people it's a stepping stone to your next property. Think of it
Yeah.
that way.
Yeah.
Okay, last one under kind of rates and strategy. Let's chat really quickly about appraisals and inspections. What would you say your top red flags you teach buyers to watch out for, and how to kind of keep emotions steady if something does pop up?
Yeah. The biggest red flags for me, and again, it does kind of depend on where you're at and like
Mm-hmm.
the specific home types, but I'm going to be looking on the outside of the property. So, like the landscaping, is the yard slope towards the house? Is there a chance that there's going to be water in the basement? Checking the roof, seeing if seem to be any major issues with the roof, and really just being aware of water. Is there water in the basement? That's a lot of times caused by the landscaping and the yard being
Mm-hmm.
sloped incorrectly. And also, a really big red flag for me is a stucco home. So stucco is like kind of like that flat, kind of looks like cement.
Mm-hmm.
Um, a lot of times that isn't done correctly. So you want to be not to not buy a house that has stucco. Like there are plenty of stucco homes that are great, but really look for dark spots and water
Mm-hmm.
damage with the stucco, because that could be like an $80,000 to $100,000 fix. So those are really my biggest red flags, is a lot of things pertaining to water, and outside the home.
One of the first homes we were going to offer on was stucco, and thank goodness we had an inspection. It was full of mold. There was mold
Oh,
everywhere behind that stucco.
yeah.
And to your point, it was about $100,000 fix, and we were
Yeah.
like, nope, we're not. We didn't want to fix her upper quite like that.
Yeah.
So,
Yeah.
and I think the other question was just with regard to appraisal. I think
Oh,
what
yeah.
I see is again, if you're working with a really good agent, they're doing, a market analysis on that property. They know what the properties are around the subject property, so they should have a pretty good idea that that property is going to appraise correctly, or if we're in a bidding war or something like that, should be able to make sure that the homebuyer has been educated on, if we're talking appraisal gaps or something like that, the what if situations. That's my most important, I think, thing that I like to teach people is like, let's talk about what if scenarios so that before it happens, we've had the conversation and it's not such a shock when and if it does, right?
Yeah, yeah, for sure. Yeah, I think that's another reason to really have an experienced agent, because they
Mm-hmm.
can, based upon that specific scenario on that specific house and the offer situation, how many offers are on the table, they can walk you through what to do. But yeah, you have to make sure that the home is worth what you're paying for it. So a lot of people will get excited and they'll be like, "Oh, there's five other offers. I don't care. I love this house. Let's offer 10,000 over asking. I don't care what we have to pay.
Mm-hmm.
Like we're going to live here for 20 years anyway." But if you are paying more for the house than what it's worth, the
Mm-hmm.
bank won't lend you the money for it. And then
Right.
you'll run into issues throughout the process. Um, so your agent really needs to help you look at other homes that have sold in the area to figure out, exactly what that house is worth. And then if you are paying more than what it's worth or going over asking price, what's going to happen if the bank says, no, this house is worth
Mm-hmm.
$5,000 less. And a lot of times you can either renegotiate with the seller or change your loan terms,
Mm-hmm.
in order for it to work.
Perfect. Great answer. Okay, shifting a little bit to offer to keys now. So, what makes a strong offer beyond just the price? So, is timing, earnest money, contingencies, communication is one of my favorites, right?
Yeah. So, I mean, this It depends on that specific seller. So
Mm-hmm.
everyone who is selling a home, whether it's an existing home where it's like a family that lives there, or it's a new construction home and it's just about the builder and their numbers, you have to know the seller and what they're
Mm-hmm.
looking for and what's important to them, which is another reason why you need a really experienced agent who can
Mm-hmm.
kind of get those details for you and so they know what to ask. Another reason why it's really important to work with a strong agent is because the level of your agent's communication with the seller's agent is going to impact your negotiating offer, like you
Mm-hmm.
said, or your negotiating power. So if your agent is kind of like being a jerk to the seller's agent, then that seller like doesn't want to work with your agent and they'll like
Mm-hmm.
put in a bad word. So it makes a really big difference. But yeah, like if the sellers, let's say they have young kids, they need to go out and find a house still. So maybe they need a 3-month close.
Mm-hmm.
Um, so you extend your closing timeline and you'll say, hey, like I'm going to buy this house, but it's going to be in 3 months, and that's great. Or if you're looking at new construction and that builder wants to get the home sold as soon as possible, then you do, maybe a 30-day close.
Mm-hmm.
So finding out what the sellers are looking for and the lender that you're using has a big impact on your negotiating power. So if you're
Mm-hmm.
working with a lender that has a really good reputation locally, that's going to make your offer stronger versus if you're working with an online lender that doesn't have a great reputation, it's going to make
Mm-hmm.
your offer weaker. So yeah, a lot of different things, I think a lot of people now are still getting home inspections, but when are you getting that home inspection
Mm-hmm.
can also impact your negotiating power. Just like little details like that.
Yeah, perfect. Love it. And I mean, honestly, one of the reasons I meet with as many agents as I can, whether they already are working with a preferred lender or not, is just I want to have a conversation with you so you know that if I call you and say, hey, my buyer's making an offer on your listing, I know Jennifer, she knows what she's talking about. This buyer has solid financing,
Yeah,
right? So that's
exactly.
kind of a good reason to work with someone local as well.
Yes. Yeah.
Um, Okay, so last one under this category, really, what surprises people the most in the last 72 hours and how do you prep them so it's boring in a good way
The last 72 hours before they buy a house.
before they close? Yep.
Yeah. I would say there's usually no surprises before they close.
Hmm.
Typically, what happens is they'll do a final walkthrough of the house. I mean,
Hmm.
that's where the surprises could come up.
Right.
So let's say you walk through the house and you're supposed to close in the morning, but the sellers haven't moved out yet.
Hmm.
So, or let's say there's all of a sudden a random leak that wasn't there the first time
Hmm.
you looked at the house. So you want to go see the house right before you close to make sure that it still is the way that it was when you saw it.
Hmm.
That's the only place where surprises really could come up. Um, and then you'll get your final mortgage approval. That is another reason why you want to have a good lender so that you can
Hmm.
actually get that final approval. And then once you are done all of those things, you'll go to your actual closing meeting. It's usually, at your lender's office or the title or attorney's office or your agent's office. It usually takes 1 to 2 hours. And that's when you sign all of your final mortgage documents.
Hmm.
Um, and your title documents and the home is actually transferred to your name. And then you get your keys.
Perfect. And I'm going to throw a little last lender tidbit that I try to cover with every first-time home buyer is we are monitoring your credit through closing day, and we're also doing a final verification of employment. So sounds really obvious, but don't make any large purchases or have your credit pulled, like in terms of going and buying furniture. That's the biggest one that we see, right? Go take out a credit card at the furniture store to buy all of your furniture without chatting with your lender first because that could throw your final approval off. And then also it seems so obvious, but don't quit your job. I've had people do that before too. Like we're gonna make sure you're still employed down to the day of closing, basically. So make sure that you wait until after you. Most people aren't quitting their job to buy a house, but a lot of people will switch jobs, not really realizing that it's going to have an impact on their approval. So
Yes. Yeah.
throw that out there just to
Yeah.
prevent any bad surprises.
Yeah.
Um, all right, so after closing, we want to turn this home into wealth. So your first year money moves. What should new owners do in the first 90 days to protect their cash flow and build equity?
Yeah. So a really big thing is to make sure that you have an emergency fund because
Mhm.
now that you're a homeowner, the biggest difference is that, if the roof leaks, now you're responsible. You don't have a landlord to call. So if
Hmm.
you don't have a 3 to 6 month emergency fund, work on like that is your next priority to work on that probably before you get the house furnished.
Hmm.
A lot of areas, I'm not sure if you have these in Minnesota, but a lot of areas will have tax exemptions if you live in the home. So researching your area if there's any tax benefits. Yeah, and then I also recommend you'll have a home inspection. Usually your lender will send you that report before you buy the house, but actually printing out your inspection report and going through anything that your home inspector recommended, so that you can work on things. And usually in your inspection is things like, cover your outside water valves in the winter, like everything that you need to do to prepare for winter is covered in that.
Yeah, I try to warn first-time home buyers, there's going to be stuff on an inspection, right? That's their job, is to find all this stuff. What you're looking for are major, like foundational things and major things. Otherwise, just think of it as your starting like honey-do list. Here's the things that we have to work on in the house, and and you can kind of prioritize and put it in order by season. So
Yeah.
those inspection reports are great.
Yeah.
All right, house hacking and upgrades, live for less ideas that you would share, like ADU, room rental, basement suite, and the 2 to 3 highest ROI improvements for year one.
Oh, good question. I mean, I think it depends on the house specifically, but a
Yeah.
lot of people don't realize how much of a difference just painting can make.
Oh
Like
yeah.
a coat of paint, either you can do it yourself or pay someone, a couple $1,000s to repaint your house, and it will look so different. It's
Hmm.
insane. Something that I did our first year, like I said, we bought a little bit of a fixer upper. We wanted to redo the kitchen, but those can be really expensive. So I literally just bought a paint kit from Amazon that I think was $100, and I repainted our kitchen cabinets and I repainted our countertops, and they looked like granite countertops.
What a
Um,
facelift, I bet.
yeah, and it made a really, really big difference. And that also will impact your resale value, even if you never like completely redo it. And we redid our floors too. I feel like floors and paint is
Mhm.
just going to change the house completely. So those are, if you, bought a home that's a little bit older, those could really help.
Okay, love that. All right, and as an investor, I have to ask this question. A 5-year vision. How do your students go from first home to a second property or a small portfolio without feeling overextended?
Yeah. So, for me personally, we got our first home and we lived there for 2 years, and then we turned it into a rental property.
Mhm.
And then we plan to do that for a lot, to just do that going
Yeah.
forward again and again and again. So that's one thing that you could do is get a house that can be rented for more than your mortgage, and really build wealth that way. That's a really good way. Or you can say, hey, I'm going to buy this house, I'm going to stay in it for 5 years, and then I'll get I'm going to sell
Mhm.
that and then get a bigger home. So as you gain equity, then you'll be able to sell that house, which then becomes your down payment for the next home.
Love it. Love it. Great advice. Okay, I have a last little section and then a lightning round of quick hits. So,
Okay.
switching gears a little bit to creator and founder behind your business, running a mission-driven business with content. How do you structure your week to serve students and still grow your brand?
Yeah. So I love the book The One Thing.
Oh, yes.
I used to work at Keller Williams, and it's written by the founder of Keller Williams, and it's
Hmm.
about finding the one thing that's going to move your business forward. And for me, my one thing is creating content. Like that's how
Hmm.
most people find me. So I have always front loaded my days and my weeks with my one thing. So I create content the first and second days of the week, and then the rest of the week is always structured so that I can be freed up for, working on other things in my business, growing my podcast, or working on client meetings. So, um, every Monday and Tuesday, they're blocked off. Like I don't do anything other than create my content those days. And then Wednesday, Thursday, Friday, I'm free to work on clients or doing anything like creative or fun so that I can grow my business. Usually about, one day a week or one day a month, I'll have like a brainstorming where I pull out my
Mhm.
whiteboard and I'm like, okay,
Love it.
where are like the issues or like where do I want to go? And usually like once a day in the morning before I start, I'll write down, my task for that day and also like talk about, well, not talk, but like talk to myself about
Yeah.
my goals, like my big goals, so I can really keep that in mind.
Perfect. Love it. Okay, last, media kits, brand deals, demystified. So, what should small creators include in a simple, effective media kit? And what's maybe one pitch tip that actually works?
Yeah. So funny enough, I actually I've never done a brand deal.
Okay.
I mean, I would say to really collect like what your strengths are and what you have to offer,
Mhm.
that brand. And also just like keep in mind what your overall goal is. Like for me, my goal is to help first time homebuyers. And sometimes right now that doesn't align with doing brand deals.
Sure.
But yeah, just like think of the big vision of where you want to go. Hopefully that
I
helps.
I love that. And it does because I was just speaking with an agent yesterday and they were asking me about my social media and what it's done for my business, and I'm like, you kind of have to think of it like your business card, and what do you want to be known for? You're known for first time home buyers, right? And so I'm kind of known for education. Like I share a lot of education around home buying, finance, money, that type of thing, but I always say think about it like your business card and what do you want to be known for, and make sure that's what you're showing through your content.
Yeah. And I think it's very easy to get stuck in like today
Mhm.
versus tomorrow.
Mhm.
And so, yeah, when I set goals, I'm usually thinking about like, where do I want to be next year? Where do I want to be
Yes.
5 years from now? And I think a lot of people focus on like, what do I want next month?
Mhm.
That really helps you to stay in alignment. So I love that, like thinking about what you want to be known for.
Yeah, I like that. Okay, really quick lightning round. What's the best $100 a new buyer can spend?
Ooh, like after they buy a house.
Yeah.
Um, oh, that's a good question. $100. New locks for sure.
Oh, perfect. I love that. Most overrated home buying rule.
Overrated home buying rule. 20% down.
Yes,
Like you don't
perfect.
need 20% down. Yeah.
One document to organize today.
Bank statements.
Hmm. A money boundary that you live by.
Making sure my monthly fixed expenses are as low as they can possibly be.
Love it. And the question you wish every buyer would ask sooner.
What monthly payment and am I comfortable with?
Perfect. And then I have a personal one because I get to speak with you who knows the real estate side and the mortgage side. And this is like a hot, I don't know, I'm saying necessarily controversial topic right now, but would love your thoughts on the 50-year mortgage.
I am gonna make a post about this today. I think it's crazy. It's really crazy. You're gonna spend so much in interest, but I think it puts another option on the table. Just like, okay, if you put 3% down, your payment's gonna be higher and you're gonna spend more in interest, but it just puts another option on the table. So I think it could be a good option for the right person who's educated on how to use it and how much it's actually going to cost. I think that a 50-year mortgage, A, you can refinance out of it e- eventually,
Mhm.
and B, you can make extra payments. So I think it puts another option on the table, but it's also crazy. What do you
So, okay,
think?
so we're in alignment with this and on the same exact page. And I'm working on a post on it too. I've seen a lot of posts like kind of like the that just I don't know, just the idea of it and people being excited about it. I'm like, okay, but as a lender and an advisor, like I need people to actually know the numbers on it, right? Like
Yeah.
this is what it means. 30-year versus 50-year. Let's look at how much you're spending. And to your point, I think it fits for the right person. Maybe you're in a job where you know you're making more money in the next few years, and a refinance would be viable and make a lot more sense. But get into the property now. But Yes, you have to know like what this is actually costing you. And the other thing that I was talking to someone about is I think you really have to know your longer term plans,
Mhm.
because if you're getting in on a 50-year mortgage, you need to realize that much less money on your payment is going towards your principal every single month. So if you think you're going to buy this house at this price and 2 years from now be able to sell and not be underwater, that, you know what I mean? That is my concern about it, is people getting in and needing to move in a short period of time and then being underwater and all of a sudden seeing this influx of foreclosures. So
Yeah, I agree.
where
I
I don't want
agree. I think it it's cool in the sense that, yeah, like it's gonna be right for the right buyer, but I also think it's kind of sad because you know that the people that aren't educated on how mortgages work, like that's who it's going
Mhm.
to hurt.
Yes.
So yeah, there's two sides of the coin.
Kind of like the good, the old, I know you weren't in the lending business then, but like the ARM days, right? Like
Hmm.
the not good ARM days that led to the housing crash. Like I just, oh,
Yeah,
I still have an ick feeling about that. So
yeah, yeah.
awesome. If you've been waiting for perfect timing, consider this your green light to get educated and get moving. Stacie just gave you the playbook, you guys. Know your number, get pre-approved, property, build a trusted team, and work the plan. You can find Stacie's first-time homebuyer classes and resources at stacierihl.com. We will also link all of her links in the show notes. They're built to take you from where do I start to we got the keys. And if this episode helped you, share it with a friend who's renting their future. And if you're new here, please tap follow and leave a quick review. It helps more women find real, no BS money guidance. And until next time, wealth isn't an event, it's a system, and you've got this.